I don't care about a candidate's race, color, or creed. I don't care about a candidate's gender. What I do care about are the issues. What I care about is integrity. What I want is a candidate that tackles issues head-on, not one that twists or omits the truth and attempts to rewrite history. Despite the new developments and controversy with Kamala's ancestry, which is literally history, we need to talk about actions that show evidence of a potential bait and switch. Welcome back to CTube. Today we are going to talk about Kamala and the American Rescue Plan Act of 2021. Is it an attack on the poor and middle class that she is campaigning to protect? We will dive in to discern the truth. Despite Biden and now presidential candidate VP Kamala Harris saying on many occasions that they would lower taxes for the middle class, they have done quite the opposite. Now Kamala is singing the same tune and it is sounding a little off-key. In addition to raising taxes on the wealthy, they have doubled down on trying to squeeze more from the middle and lower class. How? I'm glad you asked. So the IRS recently changed the minimum threshold for reporting income from third-party payment platforms, such as PayPal, Venmo, Cash App, and others, as part of the American Rescue Plan Act of 2021, also referred to as the ARPA and/or ARPA. Previously, third-party platforms were required to issue Form 1099-K if the user had more than $20,000 in total payments and 200 transactions in a year. The new change significantly lowers the threshold, requiring platforms to report payments if the user receives $600 or more, with no minimum transaction count. So, now that side hustle consigning used items for less than you previously paid for them to help pay bills, save for a rainy day, contribute to an education fund for your child, save for retirement, save for a down payment on a home, and any number of things is now reported to the IRS as income. The threshold change took effect starting in 2022. However, the IRS delayed enforcement of this change for the 2022 tax year to allow more time for platforms and taxpayers to adjust. The new reporting requirements officially apply to transactions starting in 2023. The threshold change is part of broader IRS compliance efforts expected to generate billions in additional revenue over the next decade, though exact figures are difficult to isolate for just the reporting threshold. This change was made as part of efforts to increase tax compliance and ensure that income from the gig economy, side jobs, and other online payment activities is accurately reported. The IRS believes this will help capture more taxable income that was previously going unreported, as many individuals earning smaller amounts through online platforms were falling below the previous reporting thresholds. In other words, they are coming for your side hustle. How many times have you heard that the wealthy need to pay their fair share? But these actions don't even affect the wealthy. How many wealthy individuals have side gigs in which they earned under $20,000 per year? I'll wait. The estimated tax revenue from this change is expected to be significant, but has not been precisely quantified in public data. The Joint Committee on Taxation, JCT, provided an estimate that the broader tax compliance measures, which include the threshold change in the ARPA, would raise $8.4 billion over 10 years. The IRS estimates that the tax gap amounts to $500 billion annually, with much of it is due to underreported income from small businesses and individuals using third-party platforms. This thing is serious. How serious? A separate IRS funding measure in the Inflation Reduction Act of 2022 allocated $80 billion over 10 years to the IRS for enforcement, modernization, and operations. The IRS will face higher administrative costs for managing the influx of 1099-K forms, requiring upgrades in technology, enforcement, and staffing, and it may be partially funded by the $80 billion IRS investment under the Inflation Reduction Act. The IRS reporting threshold change will primarily affect individuals with lower to moderate income levels rather than the wealthy. This will impact gig workers and freelancers who use platforms like PayPal or Venmo to receive payments for services. Many working in the gig economy, for example Uber drivers, freelancers on platforms like Fiverr or Upwork, often earn smaller amounts from multiple sources. These individuals are more likely to be impacted by the lowered $600 reporting threshold, which could include income they previously may not have had to report. People who occasionally sell items online on platforms like eBay, Etsy, or Facebook Marketplace are more likely to be lower-income individuals. Many people earning extra income through these platforms do so as a way to make ends meet, especially with the rising costs of housing and food. These are often lower-income individuals or those with inconsistent earnings who rely on side gigs. Gig and freelance work tends to attract people who don't have traditional full-time employment, such as students, part-time workers, or those seeking additional income. Many of these individuals fall into lower or middle-income brackets. Also, small businesses or sole proprietors who receive payments through third-party apps. However, anyone using these platforms for transactions that are subject to tax, though personal transactions like gifts or reimbursements are generally excluded from tax liability, but the transaction may still be reported. In contrast, wealthy individuals, especially those who derive most of their income from investments, high salaries, or large businesses, are less likely to rely on third-party payment platforms like PayPal, Venmo, or Cash App for substantial income. Their income sources are generally already subject to comprehensive tax reporting. Millions of individuals will be affected by this change. The IRS has not provided an exact estimate, but it's expected to impact a large number of Americans who earn side income, including through gig economy platforms like Uber, Etsy, and Airbnb, or by casually selling items online. So if you haven't been reporting side income that exceeded $600, even the sale of used items that didn't result in a profit. Overall, while the goal of closing the tax gap and increasing compliance is intended to raise revenue, it places new responsibilities on middle-class taxpayers who rely on digital platforms for supplemental income. Here is how this change could affect you. 1. An increase in compliance burden. Middle-class individuals who earn income through platforms like PayPal or Venmo will have to report more transactions on their taxes. This might result in more people having to track business-related expenses and profits more carefully to ensure correct reporting. Individuals needing to hire tax professionals or use software, adding to their costs. Time and costs associated with gathering information and understanding the new requirements. 2. There is a potential for over-reporting. For example, there is concern that middle-class individuals who sell personal items at a loss, for example, used furniture or clothes on eBay, will receive 1099-K forms, even though they don't owe taxes on these sales. Without clear guidance, they might mistakenly report this as taxable income or have to expend resources to resolve the issue with the IRS. Also, middle-class individuals may need to maintain detailed records to differentiate personal sales from business sales, which could lead to extra costs for accounting or legal assistance. 3. There will be an increased tax liability in many cases. Particularly, middle-class individuals and small business owners who previously didn't report income from gig work or online sales may now face additional tax liability due to more comprehensive reporting. Specifically for those earning just over $600 in side income, this change could lead to higher self-employment taxes and federal income taxes that were previously underreported. 4. This change will have an impact on gig workers and small businesses. Many gig workers, freelancers, and small business owners rely on platforms like PayPal or Cash App for payments. While the change is aimed at improving tax compliance, it could increase the overall tax burden for middle-class individuals who depend on these sources of income for supplemental earnings. Also, some small businesses may need to raise prices or reduce activity to offset the tax burden and increased compliance costs, potentially affecting their competitiveness in online marketplaces. Although people were always required to report their income, this new change will double down on middle class and poor, squeezing every penny they can get. While campaigning on the promise that they will increase taxes for rich and decrease taxes for middle class, their actions show a different picture. If we look at the reality of what is being done, once a president is in office, it is quite the opposite. Based on this change, the current administration actions show more of a focus on the middle class footing the bill for their high government spending. Could this be a measure to recoup the stimulus money back? The fact of the matter is that this change in reporting requirement is more likely to affect lower-income individuals who are using gig platforms or casual selling to earn additional income. The intent is to close gaps in tax reporting, but it could create administrative burdens for people who aren't used to dealing with tax forms for smaller amounts of income. While the wealthy, who typically rely on other income streams, will generally not be impacted. Hopefully, you found this video informative. I plan to dive deeper into the other tax changes imposed by the current and previous administration, so don't forget to subscribe. Thanks for watching.